All right, good morning everybody and welcome to this Thursday morning's webinar from VentureForge. It's been a while since I've been in the driving seat on this. I think, Josh, you're probably quite thankful that I'm back from holidays and I don't know, you actually volunteered to step up for, but thank you for covering the last couple of webinars for us, mate. It's really appreciated. So yeah, back in the driving seat, possibly a little bit rusty, so fasten your seatbelts. This could go absolutely anywhere, but hopefully it goes down the topic of how category and competitor insights can help drive growth for your brand on Amazon. For me personally, I think this is probably one of the most important topics we've ever talked about. It's the heart of every conversation we have with brands. I'm hopeful from the conversation we'll have today, we'll at least plant some little nuggets for you guys that are listening and hopefully help you take something away from today that will help you improve your Amazon business. So I'll say I'm Andy, I'm CEO of VentureForge. I can see from a list of attendees, there's about half of you that we've met before that have heard this routine and intro before. But for those that haven't, VentureForge is an Amazon agency working exclusively with brands that generate more than £2 million revenue on Amazon, and we help them generate more commercial success and clarity around their Amazon business. Of course, helping them to grow it along the way, but growth can mean anything from market share, as I'm sure we'll talk to you a lot about today, to turnover, to profit. But we're at the heart of many brands' Amazon businesses, helping them become more commercially successful. I'm joined by some amazing people today. I'm going to start with top left with introductions, and that's top left on my screen. I don't know how you're all seeing it, but Emma, I'm going to come to you first. If you'd just like to say hello and good morning.
Yeah, good morning, everyone. So I'm Emma, and I'm head of seller within VentureForge. So I happily manage a little small team within VentureForge that we sort of concentrate on the seller side of things, but we also work on a few hybrid clients and touch into the vendor side of things.
Fantastic. Thank you very much, Emma. Josh, I'll come bottom left to you if you don't mind. Let's see how those new headphones are working. Good morning.
Thank you. Good morning. It's nice to be sat on this side of the fence as well for once. Yeah, good morning, everybody. I'm Josh. I'm head of sales and marketing for VentureForge. I've worked specifically with Amazon for about 4 years now and worked very much with clients around kind of go-to-market strategies and scoping. So hopefully lots of insights I can share around this side of the platform.
I'm really excited for your contribution to this, Josh, because although you introduce yourself as head of sales and marketing, I think what that doesn't cover really is the amount of time you spend looking at market share data and category insights when you're talking to brands. So for those that start listening thinking Josh is here to sell to you, he's absolutely not. He spends about half his life looking at category data and market data for our clients. So I'm really hopeful Josh can bring, well, I know you will bring a lot to this today. So thanks for joining us. And then last but not least, Graham, good morning.
Good morning, all. My name is Graham, and I'm National Account Controller for Mitsubishi Pencil Company, and I look after the brands for Posca, Uniball, and Uni, and look after the online accounts for the business, and obviously with Amazon being one of the largest for us.
Thank you very much, Graham. Obviously, we know a fair bit about your business. I'm not going to go into any confidential stuff today. Anything you want to share is fantastic, but we're not going to open anything up. But I know in particular around understanding category insights, competitor insights, that's been a real journey for you over the last few months. Again, really, really pleased for you to join us and looking forward to what you bring to us today.
No problem.
All right, before we delve into questions, I'll let everybody get a quick mouthful of a tea or whatever drink you've got. What we always do at this point is open up with a quick poll, and it helps us read you, the audience, get an understanding of how you're using competitor and market share data to drive your business. So if we can ask a quick question, what is the biggest challenge that you're facing when it comes to tracking your competitor and your category and your competitors on Amazon? Is it a lack of access to reliable data and tools? Is it difficulty in translating those insights into action? Is it that you just don't have the time or resources internally to make that happen? Are you unsure of what to measure or where to start? Or have you just got it nailed and you're absolutely confident in your current strategy? I'm going to hang for a couple of minutes. I'm going to grab a quick mouthful of my tea before I jump into questions, and we'll see how those poll answers come on in. We often get quite surprised by these. So let's see what comes through. Not as polarizing as usual. We normally get one absolutely standout answer, but we've got two kind of chopping and changing here for first place. And it looks like the biggest challenge is resource or time internally, or unsure what to measure or where to start. Third place at the moment, we've got almost most people answering a poll now. Difficulty translating the insights into action, lack of access to reliable data or tools, and confident in our current strategy. For absolute transparency, I ticked that box to get rid of that poll off my screen so I could see the guests. So nobody is confident in their current strategy apart from me, and that's kind of me getting rid of the poll. It's those top two, unsure of what to measure or where to start and not having the time or resources internally. Well, I'm hopeful that through today's conversation, we're not going to give you time or resource. We're not going to be able to kind of magically pop something into your business, but I'm certain we're going to go on to talk about helping you understand what to measure, where to start, what tools can be used, and how to translate all of those insights into action. So thank you very much for taking part in that poll and giving us a little bit of a steer for where we'll take the conversation today. Finally, before I jump into kind of the conversation, this isn't your only chance to give us insight. We have to the bottom right-hand corner, there should be a little questions icon for all our guests. If you want to ask any questions today, please do so. Click the Ask a New Question button that appears when you click the little questions icon. Ask your questions, and we'll always spend the last 10, 15, 20 minutes, depending on how many questions come in, getting to those questions, and maybe some of our team will be answering a couple of those along the way in the chat as well. Okay, look forward to seeing your questions come in. Without further ado, let's start our conversation, guys. I've got a couple of little notes that I've bobbed up on the screen behind me here just to maybe start the conversation off. I guess let's start at a high level. Why is competitor and category insights important? Why is that something that a brand should be tracking, understanding, and regularly reviewing? Josh, can I come to you first on this? Because you start almost every conversation with our clients with, here's how your category is performing, or do you know how your category is performing? Why do you start there? Why is that a natural starting point for you?
I think it's a bit of a cliche answer is this, but I think the data drives everything. If you don't know what field you're playing in, if you don't know what game you're competing in, you've got no idea of what's happening within that market. So I think if I try and answer that at a real high level, I guess to start with, it's knowing what's happening within the market. You can't build any kind of go-to-market strategy, whether it's a new go-to-market strategy, a revamp of, or a complete fresh market strategy, if you don't know what's happening within that category.
Mm-hmm.
It's a great shout. I think when I see some of our briefs, I think the most common thread in a brief for us is growth. People want their brand to grow. I think for us to start to work out how do you grow, you've got to understand what is the size of the category. If a brand says I want to grow from 1 million to 15 million, but the category is only worth 2 million, made up example, but it's not going to happen. If a category is 15 million and you've got 1 million of it, but you want to triple in that category, but you don't understand who else is in that category, how are they winning, how are they performing, what share have they got, you can't pull a strategy together. So I'd agree with you, Josh. For me, it's absolutely the starting point. You can't plan any kind of strategy without knowing the context in which you operate in. And I'd argue that's the case not just on Amazon, it's any strategy in any channel.
Yeah, 100%. And I think when we talk about categories or kind of go-to-market, Amazon is a piece of a puzzle. So as much it's really important to understand what's happening on Amazon. If you have wider e-com digital channels or retail channels, that still has to form part of that puzzle as well. But when we're talking specifically about Amazon, understanding that Amazon market is vital.
Yeah, and it's also treating Amazon like you would any other website. So when you've got a standard e-commerce website, you would always look at your competitors and benchmark against them, and it's treating Amazon exactly the same. It's even more competitive within the Amazon sphere, so you have to maintain that benchmarking and always ensuring that you're checking what others are doing. It's simple little checks.
For me, it's also knowing who the others are. Often we get into conversation, we'll come on to pitfalls later on, I'm sure, but we often talk to brands who say, I know the competition, I've got market tracking in place, and we drop some market share analysis into a client, and there's 5 brands on there they've never ever heard of. Yeah. More often than not, private label brands, direct market brands coming from Chinese factories. But that's competition, unique competition to Amazon that most brands aren't actually aware of. They might be aware of the fact there is some Chinese competition. They often don't understand the size, the significance of it, and how they're operating. So for me, it really is an absolute necessary starting point for any brand to build an Amazon strategy. But I think when brands get into it, they unravel so much more than they're expecting to find in that analysis.
Yeah, clients are always shocked as to what we can bring out into discussions and show them what their key competitors are within Amazon, because they might be the absolute opposite to what they're seeing on their e-commerce website.
You know, I think a big word to throw into that, I think, is definition. Define what your market is. So what is your category? Everyone defines a category by browse node or top line category, but I think, as you rightly say, Andy, when you kind of get into it, there's so many nuances that sit within it. Are they a competitor? Are they not a competitor? Are they relevant? Is it a like-for-like product?
Yeah.
Yeah, absolutely. I've noticed that in the past. I spent a lot of my time daily looking at our category and seeing whether there's some new entries in there. And like you've just said, deciding whether they're actually important or not. What we're finding is, like Andy mentioned, there's a lot of direct Chinese products or copycat products, if you like, coming into the market at very low prices. And you have to sort of, instead of sort of making a knee-jerk reaction, you have to actually look at it. Are they making a dent into the category, or are they just one of these sort of fly-by-nights that are here today, gone tomorrow because it's poor quality?
Mm.
Yeah, it's a great point. I mean, we've kind of delved straight almost into competitors and understanding here. I want to stick on that thread a little bit, but I want to just take us back to that higher level of what kind of research and data points we're typically looking at. But from a competitor point of view, we often speak to brands who say, I know my competitive set, it's these 5 guys that I'm interested in. And they often actually then immediately discount 4 other brands that might be recognizable names. They discount 10 other brands that are, let's call them copycat brands, Graham, to use your language, or direct to consumer brands. And the discount was not being competition. But when you bring that into the Amazon channel, and I love your analogy of taking it back into real world retail. If you walk the aisle as a consumer and you search for, I'm going to pick your category, Graham. If I search for black rollerball pen on Amazon, you can't discount a Chinese brand because you don't see it as a competitor in the physical outlets that you're selling. Because if they're taking real estate on that screen, they will be taking impression share, they will be taking sales share. You might be choosing to not directly compete with them because they're a different price point, they're a more inferior product. But the consumer's still seeing them. They're seeing them on the aisle. You've got to understand what role every brand plays in your market to understand the role your brand will play in the market.
Mm-hmm.
Chris, I want to go right back to the top level and talk about the kind of the category and competitor analysis piece. We've kind of jumped into, I guess, who are the competition. But Josh, would you mind sharing with us, when you're talking to brands, what kind of data and insight are you normally pulling together? I know we often look at size of the prize, how big's the category. What kind of data what data points are you typically looking at when you talk about insight into a category to a client?
So at a high level, the first point is you're absolutely right. That's the size of the category and the competitive nature of the category are the 2 big ones that we talk about. Size of category is usually dictated by 2 things. It's the revenue, or the gross revenue that goes through that category, or the number of units sold. And I think as we kind of come onto this through the session, we'll talk about what's important. Is it about revenue growth? Is it about unit growth? Everyone has different visions for a business. I think it's really important to understand what's important to you. I think secondary, when you start to come and look at a competitive nature on Amazon can be defined by so many different data points or numbers that sit within the platform. But the 2 ones that we tend to look at a really, really high level are number of competitors in the market, so number of listings more than anything, and then the price point. And what we're tending to see in most cases, or in most categories at the moment, is a real direction of travel where competitive nature of categories is going up, so the number of products that have been sold, whereas price point is coming down quite heavily as well. That allows us to form some really, really good conversations, but they're the most specific ones we talk about.
I think some of the data points that I've seen getting pulled out, this with our more recent insight, and actually in some of mine and Graham's conversations, is down to a product level information. Who's selling what, at what price, which items are generating the sales. There's one of our other clients actually who's in a category where one of the main competitors launched a brand new product that overnight has literally taken over the category, and having data and tools that will allow that client to see it is this ASIN that has literally driven the entire shape of the category has been unbelievably powerful in those conversations. I can see questions already coming in about so what. It's great seeing that insight. We'll come on later on to once you've seen that data, what the hell can you do about it? But for me, being able to see the size of the category, as you said, Josh, the makeup of the category, who's selling what at what share in terms of cash and in terms of units sold. Pricing dynamics for me are really, really important. Understanding key trading events. It's great seeing that the category is worth 9 million quid, but how much of that is propped up by deal events? How much of that is day-to-day trading? How much of that, and I take one of our jewelry clients, is what I class as traditional retail events, Mother's Day, Valentine's Day, Christmas, etc. How much of it is driven by Amazon deal events, Prime Day 2. I forget the name of all Amazon's deals because every bloody week they put in another new idea out there. We've had books deals this past week. But it's understanding the shape and makeup of that category. But then below that, getting down to literally a product by product level. Who's driving the sales? Are they driving sales because they're discounting just one line on price? Are they driving sales by upholding price? For me, there's so many interesting data points you can get to. And to some extent, maybe too much data.
Yeah, sometimes it can be drowning when you've got all that data and you don't actually know what to do with it. But I think I agree with you. Looking at a product level strategy with regards to the category and like competitor analysis is key. Utilizing the products that you know have the good margin. If you need to look at pricing strategies, there's so much that you can do from a product level.
Absolutely. I think as well, by having the data and being able to sort of pinpoint who is actually a competitor, and actually then, like you say, drilling down into the actual product level, you can then, if you haven't already, see maybe if there's something within their listings that's creating that demand, creating that drive, and actually thinking, when was the last time I reviewed my listings? Have I reviewed my titles? Have I reviewed my bullets? Are my images up to scratch, etc.? So by having that data and being able to look at these competitors that are eating into your market share, or the particular ASINs which are flying, then you may be able to pull out some nuggets of information that you can then apply to your own listings to improve your own sell-through.
Mm-hmm.
I'd also almost argue a counterpoint to that as well, Graham, from one of our other clients, where they saw this particular product come to their category and it decimated the category overnight. The listing quality of the product that decimated the category was absolutely appalling. So I think your train of thought is where I'd naturally go. Who's doing well? Is it down to their on Amazon strategy? What do I need to do to keep pace? But in this particular example, it's the opposite. The on Amazon strategy was absolutely garbage. The pricing and the product was absolutely fantastic, and that's what decimated the market. I think lots of Amazon brands, apart from manually checking that kind of stuff, are left blind due to a lack of data that says this product is succeeding, not because it's got great ads, great imagery, great content, but because it's good old traditional product marketing. It's a great product at a great price. And maybe the off Amazon marketing is doing a great job. I won't reference necessarily who this was, but it's a brand that you've all seen on TV that decimated that category. Was it the on Amazon strategy, or was it right product, right price with a great big above the line campaign that we all saw on TV? Yes. And would you normally pick that up by monitoring rankings, listing quality? Probably not. So I think I'm certainly not contradicting you. I think it shows both sides of that. It's sometimes it will be the on Amazon stuff, sometimes it will be something else, but it's having that data point that says something has moved, something has changed, and finding that before your sales get decimated, so you can act on it no matter what you need to change.
Absolutely. I mean, thinking about that as well, if it's price that's driving and decimating the market or your sort of category, then it's almost more important then if you're a market leader and you can't match on price, then to make sure that everything about your page is calling out your strengths, your images are on point and your titles, to sort of try and combat that as much as possible if price isn't something that you can compete on.
Mm-hmm.
Absolutely spot on. One of the things I asked when I opened up this question was, why is it important for brands to regularly evaluate the market? What does regular mean? How often should a brand be looking at market share data and market share analysis? Josh, I know you do it all kind of upfront because that's your role in our business. But Emma, when you're talking to brands, and Graham, when you're looking at it internally, how often is market data useful?
It could be almost daily. You could create a daily habit into looking into categories or competitors. It's certainly not just a one-off task. The market's ever changing. Like I said, within e-commerce, you're always ever changing. You're always looking at what someone else is doing and trying to understand whether that's doing them justice or not. So for me, it could be daily, weekly, monthly, depending on how granular you want to go into it. But certainly with us, it's almost a weekly task where we're looking into our brands, our products, product level, what their key competitors are doing, whether they're changing the keywords, what their reviews are looking like. A simple review check can highlight something that maybe not doing so well for a competitor. And that your product does that very well. You can leverage that. There are weekly tasks that you can take on board to ensure that you've always got eyes on what people are doing around you.
Does that mean action and reaction should be weekly as well?
No, because just because somebody's changing something about their product doesn't necessarily mean that it's actually going to do them justice. It's just keeping an eye on how that data is then showing and performing for that client. So if you see that they've, made image changes to highlight more USPs with their product, but you're not actually seeing the sales increase for that product, or the reviews aren't changing, then it doesn't mean that you need to make those changes. It's about noticing, evaluating, and then discovering whether that's actually suitable for you to make those changes or to compete with that.
I think that's really, really powerful. I think that looking at it weekly, when I used to work in retail, I'd always open up my board pack with, this is what's happened in the market around us. And the amount of, one, it gave context, and two, it gave probably a little bit of defense to what I was then about to present next, which is, and here's what happened in our business. Because without the context of what's happening in the market, your own data becomes a little bit irrelevant. You're lacking all that important context. But what I never did off the back of that was knee-jerk and say, here's exactly what we're going to do about it. We'd often have a conversation about, do we do or do we not do something off the back of it? But with Amazon in particular, some of those changes that could have driven a weekly change could be really, really nuanced. You could have had one key competitor discounting to liquidate stock because they had a cash flow challenge, made up example, but disappears the next week. They've solved their problem. They've gone out of the market. They might have even gone out of stock, which presents you an opportunity. So for me, seeing it weekly and understanding it weekly is really important. Knee-jerking on market share data can be quite risky unless you're around something like Prime Day, where the success of the event will come down to the key trading within the event. But in general trading periods, weekly observation, weekly questioning, but maybe not weekly action for me is the right kind of route to go down.
Even quarterly changes, because every quarter is so different, and your golden quarter may not be the usual Q4. It may be Q1, Q2 if you're looking at like spring-like products or summer-like products. So you cannot be so knee-jerk. You do have to evaluate what your competitor is doing rather than just going straight ahead and making a change, because they can be detrimental.
Yeah, I'd agree. You know, the more data or the more time you can sort of harvest the data, you're more likely to see true patterns of business and if a change has worked in the market or not. Like you say, if you knee jerk and just see something, go right, we're going to do this. You know, you could be setting yourself up for a fall.
Yeah, absolutely. And it's also monitoring post change. You know, sometimes maybe not knee-jerk, but a rapid reaction is sometimes what's needed, depending on what the situation is. But equally, monitoring post change, has it had the desired effect? If you're going to make a really easy example, drop your price by 50% to chase some market share back, that might be a great theory. But what if next week everybody else is watching that market share data and everybody else drops by 50%? How are you responding to that? You know, what do you do off the back of that? I still think there's also a need for being really clear about when you should take action. Again, I'll use an example from one of our clients that we had a conversation with in the last 2 weeks. They were concerned that their PO value from Amazon was dropping and stagnating, and challenged us with, how are we going to turn this around? And first thing we start to look at is, well, why? Before we say how, we need to understand why it's gone in the direction it has. As we pulled the data back, there was a key point in their market share data that happened between 3 and 6 months before they engaged with us, and that triggered the massive decline in their PO value. What had happened was a new competitor had come into market and literally taken their market share. They'd nibbled a bit off 2 or 3 other brands, but actually come after this one brand in particular, and you literally saw 2 charts in market share. New brand went off like a rocket, our client dipped down. That was back in the summer of last year, and there's got to come a point when you're looking at and monitoring that data. And the challenge here was at that point the client didn't have the data, but at some point maybe you don't knee jerk after 1 week. I know, Graham, we were talking about something in your data yesterday that's got a 2-week trend in there, and knowing the context that you and I shared around that, I've got a lot of confidence that 2 week is actually a pattern now, and I think you'll see the same for the next 3 or 4 weeks. But maybe you don't knee jerk after 1, but there's got to be a point where you see that decline after 2 weeks and go, hang on, what's happening here? If the 3rd week of data comes through, right, and I really do need to start to react to this, 4 weeks of data has got to be driving action for me. Amazon is a fast-changing world. I don't believe knee-jerking is the right thing to do, but you equally shouldn't be sitting back on something for 2-3 months and going, I think it will change, because it won't. Something's happened.
I'd agree. I'd say as well, you know, knee-jerking on price is really dangerous, you know, because, you know, you could have a competitor come into the market who's being really aggressive on price, selling really cheaply, sales, you know, are booming. But actually, you know, if you're a market leader and you sell at a high price outside of Amazon as well, to then lower your price on Amazon could then annoy everybody outside the platform. But also, it's very difficult then to come back if you've then pitched your product by reducing it so much that becomes what the customer sees as the norm. It's very difficult to then get back up to the price that you want to sell it for originally.
brought me nicely onto pricing strategy, actually, Graham, because I think within the market data we talk to clients about, price is a key thing. Josh will often be talking to clients who believe that you have to be the cheapest on Amazon to win. Sometimes the market data might dictate that lower prices win in this category. But when you've got all the data that says, here's what the category looks like, I'm going to talk about just on Amazon for now. How do you determine the right pricing strategy for your brand on Amazon when you might be faced with a sea of brands that are 50% cheaper to 50% more expensive? What drives that decision making for brands?
Was that to me? Sorry.
To absolutely anybody except me. I'm just going to ask the question.
There's one thing for me, and it's that you don't always have to be the cheapest. You just have to offer the best value. So when you're offering, I don't know, bundles could make a huge difference. I know a lot of my clients are seasonal. And when we offer bundles in particular seasons, they do really well and they do gain much more of their market share. It can be the quality of your product. So there may be someone who's a hell of a lot cheaper than you, but when you look at their reviews are shocking. So, and Amazon now is very much a considered purchase. For me in particular, I am a review reader and hunter. And if I see like an influx of bad reviews, it does make me change my mind and go for the more expensive item. So for me, it's not always about being a race to the bottom. It's about what you can offer. And that strategy could be understanding your audience, understanding their purchasing behavior, looking at how competitors are doing with their audience and their purchasing behavior, and then aligning your pricing to that.
I think a key word for that is positioning. Know what your positioning is in that market. Graham, you made such a good point then about discounting to acquire new customers. Doesn't mean you're going to keep that customer, so that spend becomes slightly wasted in that instance sometimes. So I think understanding your positioning in the market and sometimes staying firm to that positioning, as you rightly say, I mean, you don't always want to be the cheapest in the market, and there's a reason for that. And this is a conversation we have time and time again with winning is easy on Amazon if you want to drop the price, but one, you'll slam your margin, and two, it's not sustainable strategy. So there's ways you have to demonstrate value and proposition in other ways than just slamming a price.
Totally agree. If you're the market leader and if your product is top quality, why drop to their level? These people can come in. Yes, they might take some market share initially, but like you've just said, chances are if they're selling it cheaply, the product's probably pretty poor. And in the future, the reviews are going to be poor and they may just fall away. But if you knee-jerk and drop down to that price immediately, you've really got nowhere to go. And then you've devalued your own products. Yeah. So I think sometimes you just got to hold your nerve. And like we were saying before, give it time. Don't just, drop to their level immediately. Say, okay, we acknowledge they're there, but let's just sit tight. We know our product's good. We've got loads of good reviews, and then just see what happens. Harvest the data and then make a call on it from there.
I think for me, pricing is so contextual. For me, the biggest piece of context is what is your strategy? Why are you doing Amazon? If it's purely about driving margin and profit from the channel, that will drive one kind of pricing strategy. If it's, I want to go and knock competitor X out of the market, that might drive a completely different strategy if you're trying to build a brand from the level that it is to a much greater level. Then you've got to put it in the context of what's going on outside of Amazon. I'll come on to that as a conversation in a second. I think that's a whole other challenge around Amazon pricing. But for me, locking to why are you doing Amazon will help you then make pricing decisions when you're looking at the market data. With some brands, I could argue that you drop your price. So some brands in some context, drop your price to chase volume, to chase market share. If your strategy is to dominate the market, you can then slowly build that from that position. You might do that contextually throughout the year. We've got some brands that will discount out of season to hold their rankings and hold their position. They might then hold a higher price in season, which might seem counterintuitive, but when the volume's there, that will drive a much better margin position, and market share might become less relevant. Do you want most of the market share but minimal margin, or do you want less market share and greater margin? And then through prime trading events, if Becca was here, one of our former teams, she'd be banging the drum all day long about not discounting through Prime Day for a lot of our clients, because the volume comes into Amazon. So do you really care at that point around grabbing volume, or do you care about grabbing value and margin, which you'll achieve possibly by not discounting? So for me, it's context. Why are you on Amazon? What's your strategy? Of course, then you wrap around that the context of what's happening inside your category. But I think When people ask pricing questions, I think I'm often being asked, what's the silver bullet? What's the right price for Amazon? Do we need to be the cheapest? Surprise, surprise, there's no simple answer. It's all contextual to your brand, your strategy, your category, and only you as the person inside that brand and with that data can make those decisions, in my opinion.
I totally agree with that. If you're number one organically in your category, what's the need to discount your product? You're already there, you're already visible, you've already got, I would say, decent market share because you are number one. But I would get it. If you were further down, on page 50, you're going to need to drop your price to try and get up the rankings and try and get yourself more visible. So I think, absolutely. I think if you're a brand and in the market it's pitched at a certain level, you need to maintain that because otherwise you're just going to devalue your own brand.
Yeah. I think there's other ways you can do it as well. Obviously, we talk about kind of price discounting rather than damaging that retail price point. You can always look at ads contribution as well. So rather, for example, applying a 10% discount or whatever, just contribute that to an ad strategy. Doesn't lose the consumer that you're targeting at, but also allows you to get higher in search and acquire more customers as well. Yeah. And I think another part of this is probably worth calling this out quite significantly. Amazon isn't for everyone, or the work to get you on Amazon could be quite significant in some instances. If you look at brands that have got really complex distribution strategies and resellers, yes, you can absolutely get to Amazon, but the complexities and time to get there can be challenging in some instances, which I think goes back to the whole point of this session of having the data and insights can warrant that level of investigation and conversation as to how it can happen.
Mm-hmm. You probably put a different lens there, Josh, on the word competitor, because obviously we're talking today about competitor and category analysis. You've also got self-competition, and that's where I think the resellers come into it. You think about your pricing strategy when you've got your own customers also competing against you on the buy box, and you've got your other customers in other channels, let's say Argos, big generic retailer, selling at a discount price that then may drag your Amazon, particularly if you're on vendor, will drag your Amazon price down. And you have very little control over that in terms of the Amazon world. On seller, you've got more control. You may lose the buy box if you're not competitively priced. So you've got pricing strategy in terms of your Amazon category, but how do you then use category and competitor in your own data to understand what's the impact of your off Amazon sales on that Amazon price? Because to some extent, you will lose control of that if your distribution strategy is not watertight.
Mm-hmm. Definitely.
Yeah. I was going to say it's a whole other conversation. We spent years getting through this with certain clients to be able to control it. Is a sale a sale, and you accept that. However, you lose control of margin and challenges that can happen within the whole ecosystem. I think to your point, Andy, it goes back to what is the value of Amazon, what is the positioning of Amazon in your business. Yeah. But I think use data and insights to drive that conversation.
Absolutely. Right, I want to move on to some real specifics now. I've got various ways of getting to market share data. What tools and technologies, and this might be more for VentureForge internal people, but feel free to chip in, Graham. What are we using and what can brands use to understand their position in the market, the shape of their market, size of the market, pricing data? What are the go-to tools and technologies to help brands do this?
How long have we got?
Probably about another 10 minutes before we go to audience.
There's so many tools out there, to be completely transparent. There's so many different ways that you can get the market share insights and data. I think from our own internal perspective, we use quite a controlled data stack because it allows us to get the data that we want in the format that we want. Graham, you said something earlier about the amount of data points that are available can be scary, I think, to some point. So I think it goes back to the point of focus on what's important to you first of all, and then you can start to look at what data stack you want to use. So give a very brief rundown of kind of the data stack that we use from a category and insights perspective. So Perpetual Prism is probably one of the best ones that I've seen on the market for the past few years. It's not just the availability of data, but it's the speed that data is available as well. And I think that's really important when we talk about any e-commerce digital channel. Using data that's 7 days old is pointless to a degree sometimes. So I think the availability within it and the accuracy is the big thing. Mm-hmm. I know if Jonathan was sat next to us today, he'd probably talk to us about how many comparisons he's done and how he looks at platforms, etc. But the accuracy is kind of second to none from what I've seen personally as well. There are also some, I say entry-level products, things like Helium 10 on some functionality of their platforms are quite entry-level, but also the functionality in the other areas are really, really good as well. So I don't think it needs to be a super technical tech stack, but I think it needs to be thought out is probably the best word to do it. And Emma, I know we spend a lot of time talking about kind of the right ones, don't we? So
yeah, it's whatever KPIs or goals you want to target and monitor, that you would base what tech you use for that. So I think, like you said, Graham, you can have so much data, you can look into absolutely everything, but not all of it will be useful, or not all of it will be useful for a particular strategy that you need to manage. So it's really honing in into what's going to work for you. So for us, Perpetua works incredibly. It helped me this week looking for really reactive data that I needed based on a dip in sales for a specific category. But yeah, it's whatever you're wanting to monitor and compete against, and look into that category and how that tech works for you.
Absolutely. I think, before you even start to look at data, I think you need to, as a business, sit down together and say, okay, what is our goal? Which direction are we going in? What data is important to us? What isn't? And then going to see what's out there. And then once you've found that solution that provides those data points, is then condensing it into almost like a one-page or a one-click report where you can instantly see everything that you need that's relevant to you, to give you actionable points, to then make some changes to your business.
Yeah. I think, sorry, just to kind of finish on that point, Andy, I think what's quite important as well, having the insights and data is great, but actually having somebody that understands it is just as important as well. Anybody can look at a conversion rate, a metric, a number, but without having the understanding of what it actually means in an Amazon world, it can be just as dangerous.
Yeah,
especially from an ads perspective, with like competitor insights and category insights and how you're working your ad performance. Having somebody that understands the data that they're seeing from competitors makes a huge difference, because it's where it hits you in the wallet where you're spending.
Absolutely. It's all right. You can look at a metric like, how many page visits are we getting, and looking at conversion rates. But if you don't know how to then action it to improve that, then it's kind of pointless having it in the first place.
Yeah.
I'll try and be very as concise as I can. I've got a few favourite tools for tracking competitor and category insight. My favourite, and often most overlooked, is that. It's a cup of coffee and 30 minutes and get on Amazon and walk the store. When I worked in retail, walk the aisles, go and see what's happening, and to sit down, make it a Monday morning job. Doesn't even need to be weekly, a daily. Sit down in the morning, go to your browse node, and give or take, the order of the products in the browse node will pretty much be the best seller. So if you want to understand who's moving, who's growing, who's shaking within my category, walk the store is a very straightforward way of doing it. You could go a step further, screenshot that, dump it into ChatGPT, ask it to turn it into a spreadsheet for you, dump the new screenshot in the next week, and all of a sudden you can see the movers and shakers in your category. Josh, you touched on Helium 10, very, very low cost entry level tool at the starting point. You can scale up to big enterprise tools. But if you want to start to see data of what product is selling in what category, at what kind of volume, I would argue the accuracy of data in Helium 10 is not as good as it could be, but the shape of the data is good enough if that's the starting point for you. You then got things like Jungle Scout, Cobalt, and Perpetua Prism, which we use. They're much more enterprise level tools, but the power it gives you to be able to say, here's my category, and show me a chart at the touch of the button of what's happened in that category over a week, slice it and dice it by brand, by product, by whatever method. I'd say within our teams, we can get to what's happened in my category and what drove it within minutes rather than hours from that particular data tool. And then beyond that, if you want to start to get into more granular data, Keeper. Keeper's not really seen as a category analysis tool, but when you start to talk about self-competition, who's chasing your buy box, what share of buy box have you got, but also who else has got share of that buy box or your competitor's buy box. People see Keeper as a superficial tool, but below the surface, they have got an unbelievable amount of data points. And we've built tools internally that allow us to get to those data points at scale and quickly. So if you're starting to get into this seriously, that's definitely what I'd be looking at is building your own tool on top of something like Keeper's data set, which is where we're starting to go with some of our stuff internally. But most fundamental, walk the store. I was going to say, get out there and walk the store, and I'll sit at your desk, have a brew, block your diary out, and watch what the competition is doing.
I do that every night shopping on Amazon.
I meant professionally. I'm not just spending your income on there.
I totally agree with you, Andy. I mean, I do it weekly, and I literally sort of reset myself and go, right, if I was a customer, not working for the business, what would I do? What would I be typing in to find my product? stripping it back like that just sort of grounds you and allows you to look at your business and go, oh, something might pop up on the screen that you weren't aware of, or, like I say, a competitor may be on the screen that you weren't aware of, or there might just be something. So it is like walking the physical store, but just stripping it back and just typing in some really basic search terms that people may accidentally type in, around your category, and you just might find little nuggets of information there that you can then use in your own products.
Yeah,
I think that's another real nice little starting point for another tip. Is when we look at category analysis, it's easy to think. Josh used the phrase earlier of browse node. Often, a lot of our category analysis does hang off an Amazon browse node because that's what the client sees as their category. But building category analysis around search terms. So I made up an example in your world, Graham. I'm sorry, I should know the data, but your most important search term might be black rollerball pen. Now, to have a market tracker that shows when somebody searches the black rollerball pen, what do they buy, will start to allow you to see, well, is that how I'm succeeding? And if you've got 80% of that share, you're going to need to really keep hold of that. So if somebody pops up next week and the week after and slowly start to chip away at that, that gives you a preemption that you've got a problem coming unless you face into it and deal with it. So not just category analysis, but search term share analysis is also important here.
Mm-hmm.
Yeah.
I've got another 20 questions I could ask you guys. I'm going to probably narrow it down to a couple because I can see the audience Q&A building up down on the little tab there. I think let's flip it from what could you do to what are the problems. So what are the common pitfalls that we often see when brands are trying to analyze competitors in categories? Where do they go wrong? What are the problems? What are the flaws in the approach sometimes?
Mimicking. So if you're mimicking certain brands or certain products and how they're performing, it could be detrimental to your business because that's not how your product performs in Amazon. So it's not just about a copy and paste strategy. It's about analyzing the data, evaluating how that would work for your brand, and then maybe taking small bits from a competitor or from that category insight and applying it to your brand or your product. You can't just continuously copy what other people are doing.
Absolutely. I think one of the key things with Amazon is being unique, and being not like everybody else. And, we certainly see, as I mentioned earlier on, sort of white label brands or copycat brands come in and trying to mimic our brands, because we're the market leader. And so, that's where I think it's important then for us to, double down and overemphasize why we're number one. What is it that makes us unique, and why are we in that position in the first place?
Mm-hmm.
And if we're not highlighting every reason why we are, then we should be. So I think copying other people is probably one of the worst things you can do. But like Emma said, there may be some little snippets in terms of keywords or the way the images have been created, or something that you can actually then apply to your own products and give you a bit more of a lift.
Mm-hmm.
Yeah. I think some of this we've already kind of alluded to as well. Graham, you talked about discounting certain competitors. I think it goes back to not understanding what your true category is. So, Andy, as you rightly said, is it a search term? Is it a browse node? Is it actually this Chinese reseller is becoming a competitor? Yes, I don't see that in the wider retail world, but Amazon is unique, as we rightly say. So you've got to understand what your category is.
Mm-hmm.
Absolutely.
You stole my thunder, Josh. I was going to say pretty much that, but ignoring the nuances of Amazon, brands that say to us that it's not, that's not my category. So this is the perfect time for a delivery man to come and knock on the window whilst I'm talking to you guys live. Excellent. You're very persistent on dropping that parcel off. Thank you. Excellent. It might actually be Amazon. So to the point, ignoring the nuances of Amazon, your competitors that are in that category might be competitors that you're not aware of. When we talk to brands that say, this is my category, here are the 5 competitors, and then you unravel that actually 25% of the market belongs to 2 other brands they've never heard of, but they still want to ignore those competitors because the wider business, of which Amazon might only be 5 or 10%, doesn't pay attention to them. If you ignore the nuances of Amazon, bit by bit, slowly, you'll find your Amazon channel gets chipped away at, and you have to view Amazon as a fresh, with real data, proper data that's relevant to that category.
Yeah,
yeah. I think it's important to review everything regularly. I think sometimes businesses or companies can create their listings and just sort of sit back and think, well, I've done my job, But I think it's really important to keep on top of things, keep reviewing, whether it's once a month, every couple of weeks. again, it goes back to your own resource and how much time you have to be able to do it, of course. But I think it's really important not to just sort of sit back and hope everything will be okay. You've really got to get into the nitty gritty and keep reviewing, because it might just be a very small thing that could have a big impact on your sales.
Mm-hmm.
Absolutely. Final question for you guys, and before I go on to the audience Q&A, what practical steps can brands take to turn analysis and category insight and competitor insight into something actionable?
It's really turning those insights into those actions, but what you require for your business. So whether you're going for the keyword strategy, if you're looking at the category insight and you need to be doing some updates on your keywords, then that would be a whole strategy on its own, organically increasing the value of your products and ensuring that you've got the right keywords there, whether the back-end keywords, whether in the product titles. There's so much that you can do organically. Again, then there's the ad strategy within the competitors and the category insights as well. Are you advertising at the right time of the day? Are you creating the campaigns that are actually doing your products justice, or pushing your products out there? The strategy could be across so many different aspects of your listings, organically, ads, images. We forget about design so often within Amazon, but looking at what competitors are doing with regards to their design and how they are aesthetically looking within the market can be a full other strategy for you and your brand. Is your first main image clear enough? Is it zoomable? There's so many different things that you can look into. But again, it's what are your goals for your business? Marginally, how's that going to work for you? And then applying that data to suit your goals and not to be knee-jerk.
I think strategy first, tactics second is what I say to clients when I'm speaking to them. Stay firm to your strategy and the tactics will naturally kind of fall off the back of it. I always talk about Amazon as kind of a fire. If you look at it, it's about adding fuel to that fire. If you leave it, it will burn out. So you've got to keep adding fuel to that, whether that's, as you rightly say, with ad strategy tweaks or things within your content or pricing strategies. All of these little tweaks, as long as they're driven by data and insights, will make significant difference. Mm-hmm. But we always go back to that strategy first.
Yeah, that's great. I think consistency is key as well, especially if you have products outside of Amazon as well. So I think it's important that there's a consistent customer journey. So, what they see on the high street in terms of imagery and visuals is the same as on Amazon. So they don't sort of go onto Amazon and think, hang on a minute, is this the same product? It's got the same name, but it doesn't look the same as when I saw it in town or whatever. So it's really important to have that consistent customer journey as well.
Yeah. And that can be just how your storefront looks. Does your storefront look exactly like your e-commerce website? Are you getting the same feel? I agree with that. Making sure that there's fluidity.
Yeah. I would always try to work with a 3-stage framework of what's happening. So that's your analysis, your insight, your data. Why is it happening? And that's try to translate that into, well, somebody's lost or gained market share. Kind of try and understand why has that happened? What's driven? And then come to the 3rd stage of, so what? So what am I going to do about it? But looking at that purely through a lens of your strategy, your direction, your brand. I think by separating out those stages, you can move quite nicely from what is going on into insight, but you have to go through that lens of why is what's happening, and what am I going to do about it, which might actually be nothing. In the context, as you said, Josh, in the context of my strategy and my brand, I might not actually want to react to that price decrease in the category because it's not the right thing to do. It might knacker my sales in Argos, Sainsbury's. It might put me in a position that I can't defend in the future. It might be margin negative. So 3 stages and allow you to move from what's going on to what am I going to do about it. But it's got to be through the right lens and the right context.
Mm-hmm. And right for your brand.
Yeah, sometimes, like I said before, it's better just to sit tight and not actually do anything.
Absolutely.
Mm-hmm.
And actually, and that might be the long-term strategy, or at least hold your breath for a week. We talked a lot about not knee-jerking, just digest it. Amazon is fast-paced, but it's not that fast-paced that you need to knee-jerk in days to weeks. You also have to make decisions quick enough. But yeah, great context.
Mm-hmm.
Right, let's have a little breather before we go to audience Q&A, which is where it will get a little bit more rapid fire. But before we do that, we've talked a lot today about understanding your brand, your category, and how it's performing. we have some amazing tools at VentureForge, and Josh has kindly offered up some of his time. If you as a brand are listening to this and you want to get some time with Josh, free, no restrictions, no sales push from Josh, just an honest offer of sharing some data with you, we'll happily sit on a half-hour call, show you how your category performs, how your brand performs in that category, and share that data with you following the call. So if you'd like Josh to reach out to you to set something up, there should be a second little poll popping up on the screen. I'm going to tick yes, Josh, because I'd love to talk to you about that. So that gets it off my screen. But please, if you would like Josh to reach out and share some market data with you, free of charge, no obligation, please just tick that box and Josh will follow up on that in the next 24 hours or so. Fantastic. Right, guys, have a little breather. Get your cup of tea swilled if you need to do. Here come the audience Q&As. I want to jump in first with a question from Leah, because I think we've almost answered Sean's in that last section. So we'll jump straight into Leah. When I'm looking at category performance, I'm never quite sure how granular to go. Is it better to focus on high-level trends, or should I be drilling right down into sub-niches or subcategories for actionable insight? What are your thoughts?
For me, it would always to start big and then almost zoom in. So start with the top, middle and bottom, the top being the market trends, the market insight, overall, how's that category performing? Then you would go into the middle, which would be those category segments. So looking into those browse notes and going a little bit more granular. Then going to the bottom, which would be those competitor specific actions. So it's start with the wider net and then bring it further in. And however that data book works best for you and your business, that's when you would stop at the granular level or continue to go even more in depth.
I'd echo exactly that. Let's give an example from a client last week. My PO value is down. Why? We start off with what's happened to the category, because if the sales in the category have gone up or down, that gives you part of the answer. Yeah. What happened in that category was, apart from seasonality, sales were relatively flat. You then go down to the next level, which is what's your market share? Because if sales are flat, but your sales have dropped, then clearly your market share has dropped within that category. So then you verify that. That then shows you that somebody else's market share has grown. It's like, okay, right, why has that happened? So then it's delve into that brand and look at their products. And what you identify there is 2 or 3 products. I'm going to jump right to the bottom now, where they've launched a new product. It's relatively generic. It's mass market. It's at a really keen price point, and they've stolen share via that. So yeah, I'm echoing your point there. Broad, what's happened to the category, what's happened to share, then to a product level. Then you can spider off into price, product listings, all kind of stuff. But you have to start at the top to work out where to look lower down the funnel, in my opinion.
Yeah, it's definitely that funnel of insight and research.
Yeah, I think it goes back to what we were saying before, is knowing as a business what parts are important to you or not. And I think one thing to really always consider as well is, will actioning some of these points further down the funnel damage my brand? Because the brand is the most important thing. So there's a point where you need to stop and go, actually, we think it could help us, but actually it could damage the brand at the same time. And the brand is the most important thing for longevity. So you need to stop at a certain level. So again, it just goes back to, what's important to your business as a whole.
Absolutely. Thank you very much for your answers on that. Let me jump into the next one. Farid, great question. Do you have any advice on how to compete in a market where an established brand has decreased its prices by up to 50% and maintained that level for a year? Quite possibly take counselling sessions if I was in that category. That feels like an exceptionally... Come to one of our round tables, actually, which do become counselling sessions. That sounds like an incredibly tough challenge. Guys, any thoughts?
Sorry, I'll answer this one, Fred. I know you'll love my bluntness, as we always are. I can probably guess which product and category you're talking about. I think for me, I'd be quite transparent with this of, is it the right product for Amazon anymore? I'd go back to that real high level of what's the vision. If you can't compete with it from a margin perspective, potentially it's not the right option for Amazon anymore. But what I'd encourage you to do before going down that lens is looking around, seeing what else is happening in the market. I don't know whether it's brand or brands you're talking about, so there's probably a little bit more context that needs to sit around this. But for me, I'd go back to that higher level of what's the purpose of that product on the channel.
I'd also I'd be looking at that through quite a skeptical lens, because if somebody's maintained that level of pricing for a year, one of two things are happening in my opinion. They're either buying market share and trying to hold that position for a reason that might be obvious to you if you're in that category. It might also not be obvious, but to do that for a year is
sustainable.
It's not sustainable at that level. So they're probably doing the second thing, which is, well, two or three other things. Losing money hand over fist and aren't commercially aware that that's happening. And you'd be amazed how often that happens when you see brands selling product and it doesn't make sense. Three, they may have something that you're not aware of in the supply chain. It may feel that that's unprofitable and unsustainable, but if somebody's engineered a product that can sell at 50% cheaper than they were doing, that could be supply chain. They could have value engineered that product. They could still be skimming a margin. I'd be running some profitability analysis on that, looking at how are they selling on Amazon, what are their margins likely to be, what COGS would they need to be buying at, and I'd be asking myself the question: can I source that product at that level? Is there something we're missing there from a supply chain point of view? And then fourthly, if they're on Amazon vendor, this might not even be the brand that's doing it. This could be, and we've seen many examples of Amazon buying a product at a price and retailing it at exactly the same price, because Amazon's strategy is to hold that category. It might feel very unintelligent, but they might be buying that widget at a tenner and selling it at a tenner. So it might feel to you that Amazon are dropping, the brand is dropping the price, but this might be Amazon doing it to hold their share of category regardless of margin position. And again, we've seen that in quite a few examples.
Mm.
So I think for me, there's probably a lot more insight and data needed around that to understand exactly what's going on. Some of that you might be able to put your hands on, Farid. Some of that you might never get your hands on. But for me, a brand that's been at 50% discount for a year, that's not sustainable. There's something else going on behind the scenes there that means that either they or Amazon can afford to do that.
Yeah.
How do you compete? Which I think is probably the crux of the question. I go back to data first. How are they doing that? Why are they doing that? Because if this is a loss leader, you might decide not to compete or to compete.
Yeah, don't race to the bottom if
if you can't, don't. If it doesn't strategically match what you're doing, don't.
Yeah.
I would also say as well, going back to branding, if they've done that for over a year, that's going to be immensely brand damaging, because essentially they've now become a discount brand. So if they were pitching originally as being a premium brand, but they've been 50% off for a year, that's pretty bad. Basically saying, well, we've now become a discount brand, and it's very difficult to come back from that.
Mm-hmm.
Yeah, great point. I was thinking through the question. We've probably got time for one more, and I'll make sure we take one that's going to add the most value to people. Let's have a look what we've got. Let's go with this one. It's got a great question from Rachel. What's the best approach to defend market share when competitors are using aggressive discounting or bundling tactics?
Josh, any idea?
I think there's a lot of ways to do this, to be completely honest with you. Andy, you started to talk about loss leaders. Mm-hmm. Is this in a trading period? So is this something that they're doing during Prime Day, where they're actually hammering the price? Is this, on the flip, something we've just seen from Farid there, when this is an ongoing piece? I think it comes back to what you're trying to achieve within Amazon. The obvious answer to this would be to match it and tackle it, but that's not always going to be doable in a lot of cases. So I think for me, I'd probably give a very similar answer to what Andy just gave then around Farid's question. Go back to the market data, understand what's happening from a high level, then you can build out from a low level what's happening, and it goes back to that right product, right placement, right opportunity as much as anything.
There's one client we had a couple of years ago that used bundling really effectively, and people felt that brand was discounting. They did it was a skincare brand, and one item would cost you 14 quid, and they did a 4 for 3 bundle where you paid for 3 and you got the fourth one free. That effectively looked like a 25% discount in terms of price on that product, and that disrupted that category. What the brand had calculated was actually quite cleverly. The product was about that size roughly, and the FBA cost of that was about £3. When they bundled that up to 4 products, the FBA cost didn't scale to 4 times that cost. It went to about £4 to ship 4 of those products. So the brand was actually making more margin selling 4 products for the price of 3 than it was selling 1 product for the price of 1. So whilst everybody else in that category was looking at it thinking they're discounting by 25%, they were at retail price, but the margin had actually gone up in terms of percentage on the cash. Yeah. So there's lots of tactics you can deploy here. I'd say again, let's go back to data. What is actually happening? Are they taking share by discounting and or bundling? what can should you react to that based on your own Amazon strategy? If you're a full price only brand, discounting probably doesn't, bundling may do, but I'd take a real step back. What's happening? Why is it happening? What's your reaction to it be? You might follow, you might go harder, but there's always a smart way around that once you know your own data.
Yeah.
Ladies and gents, sorry, we're at 59 minutes. So I think before people start dropping off and heading into their next meetings, I just want to really thank everybody who's joined us today. You, the guests, thank you very much for giving your time and joining us and answering all the questions that I've thrown at you today. To everybody who's attended, thank you very much for giving your time. For those that have completed the poll, Josh will reach out. And if anybody has any follow-up questions that we haven't got to, we'll also follow up with those today as well. But finally, thank you very much for giving your time to join us today. Please keep your eye open on your email for our next webinars. We have more planned. They are regular, but we also have quite a big change coming down the tracks, which is very, very exciting for us. I'm going to say no more apart from it won't be 4 heads on the screen. It will be 4 or more of us actually in real life conversation together, sat around the table. So watch this space. It'll all be announced fully when we get there. There's some great work going in the background, and we're very excited about it. But thank you for joining us today. We'll see you on the next one. Thanks, and have a great day.
Thanks, everyone. Take care.
Bye-bye.
Bye.